All right, good afternoon. I'm here with my good friend, Mark Charest, Dr. Charest from beautiful Puerto Rico. Thanks for joining us today. This has been an interesting time. There's earnings reports going on. I can't think of a bigger contrast we've seen between something like NVIDIA and something like maybe the biotech still in the doldrums a little bit here. Where are we? And give us a little color into this contrast that we're seeing in the broader markets.
Yeah, no, absolutely, Jonathan. Well, clearly, we're seeing all-time record highs out of the Nasdaq and the S&P, driven and mostly by this AI frenzy. I think there's no other way to put it. A fun fact just for you, Jonathan. NVIDIA on the quarter today gained about 277 billion of market cap. That's the largest single day gain ever for a stock in market cap. Translating that to sort of pharma biotech lore, that's larger than the size of Pfizer and Bristol Myers combined.
Holy cow.
So,
Something else.
we're in rarefied air here in terms of where the broad markets are going. But coming back to our sector, right? I mean, we've been in the longest and deepest pullback in the history of the S&P Select Biotech Index, 65% peak to trough drawdown. We're in the 13th quarter. We've had to move off the bottom, but we're still in the top end of the consolidation range. So, juxtaposition against the broader markets is still that of relative underperformance that's been quite extreme, and we're optimistic that that relative underperformance will reverse itself and that gap will close as we go through this year into next.
Well, despite that relative underperformance, we've still seen a pretty good amount of M&A and even an uptick in some of these secondary financing. That has to be good news, albeit maybe not translating up and down the market per se. What are you seeing in the M&A world that's making you interested?
Yeah, no, absolutely, Jonathan. I think this is a good leading indicator for where the broader sector might go. But we've seen we saw a flurry of deals at the end of last year. We've seen a couple more, as we've gone through this year, right? So Gilead stepped up for about a $4 billion acquisition of a company called CymaBay. CBAY was the ticker. That was perhaps anticipated in the sense that CymaBay had announced data for their lead drug, seladelpar, in orphan liver disease called PBC, that really showed differentiation. So it was viewed by a lot of analysts to be a best-in-class data package, and a lot of folks kind of anticipated a takeout. It was nice to see, Gilead step in, and I'd say the size of the deal was pretty fully valued. I think peak sales estimates for seladelpar and PBC range from about 500 million to a billion. There's a bit of a range there, but if you think about the deal in terms of peak sales multiple, it's kind of a 4 to 8x peak sales, which that's a healthy valuation. So I think that's a good thing, and we like to see that. The other deal we saw, Jonathan, was Novartis acquiring MorphoSys. This one's about $3 billion acquisition value. But Jonathan, this one's controversial, so
Right.
you'll like this one. The scuttlebutt here, and there was a pretty well-known biotech reporter out with an article saying Novartis is has internal strife over this one. They're going to walk away from the deal, and there's some hyperbole out there, and I mean, we could kind of put that to the side. But the controversy is that MorphoSys's lead drug is a drug for myelofibrosis used in combination with a drug called ruxolitinib, which Novartis promotes in Europe. And the outcome of this trial, which read out a few months ago, was that it met the primary endpoint, but there was a key secondary endpoint that wasn't met in terms of symptom improvement for these patients. So there are some questions about what a regulator is going to think about this. Are they really going to approve the drug? And analysts have been debating this. So this one certainly is not consensus that it's going to be smooth sailing. Clearly Novartis has a point of view, and I imagine they're going to go ahead with the deal. I think that by and large, big pharma companies, when they announce an acquisition, their reputational capital is on the line as well. So they're going to do everything they can to close this deal. I don't, internal strife or not, I think once it's announced, the CEO said they're doing it. I think I put my money on the deal getting done. But I think just the take home for folks, looking at the controversy here is that, hey, you've got a big pharma company that's buying a drug where there's debate in the the Wall Street and scientific community over its approvability, I'd say that's pretty bullish for the sector.
That's really bullish, especially we've seen, the Gilead CymaBay had trial results. We've seen a lot of preclinical trial acquisitions going on lately. So this is a little bit of a change, which leads me to another one you've discussed, this Cytokinetics. That stock went on a rip with some takeout speculation, and then some things kind of brought it down to earth a little bit. What's going on with Cytokinetics?
Yeah, that's an interesting one in the sense that, I think you said it well, it was highly anticipated that the company could be acquired. They announced some really interesting data in a cardiac indication called HCM in December of last year, which looked really good. So the data, analyst consensus on this one is the data looks to be potentially best in class. Bristol Myers had acquired a competitor company called Myocardia a little more than a year ago for about $13 billion. And so, Cytokinetics is trading at about $7 billion. People are saying, gee, the data might be better. Gee, maybe it's worth more than 13 in a takeout, but that hasn't happened yet. So, there's anticipation on both sides. And, I think we're left waiting to see, if someone does step in here or not.
Yeah, interesting. Well, let's shift to a part of the market that's not in the news. Maybe some of these secondary deals or these pipe transactions. Maybe really quickly, what is a pipe transaction, a pipe deal? And then why is it noteworthy that some of these are trading at a premium in the last week or couple of weeks?
Yeah, no, absolutely, Jonathan. So a pipe transaction is a private investment in a public entity. So that's typically when a syndicate of specialized investors get together and approach a company, it's called kind of reverse inquiry, where they, approach management and say, hey, we really like the prospects of your company. We look at your balance sheet and, think you could benefit from additional capital resources there. We'd like to structure a financing and buy shares directly from the treasury, not as an underwritten, publicly announced transaction, but as a private one. And in the context of a pipe transaction, here's the key point, Jonathan, is that sometimes investors can go under confidentiality and see some of the company's data before it's publicly released. And so the two deals that you're alluding to that were recently done, pipe deals that were done at a pretty substantial premium to the trading price of the stock, which I should call out as being unusual. This is not something we typically see. The companies were Kura Oncology and Cogent. And both of these companies have data events coming up, and they did pipes at more than a third, each one about a 30% or more premium to the closing price. And these are not small pipes. I think one was 140 million, the other one was 225 million. So isn't chump change here, and so I think investors are looking at this and saying to themselves, "Gee, the syndicate that did the pipe must have gone under CDA, saw the data that's going to be announced, that's upcoming, and must be pretty good. So that motivated them to do the pipe. Ergo, the stock could be more interesting." But I think the fact that we're seeing these transactions being done, a couple take-home messages. One, I think it's a reflection of, kind of a bullishness in the space and an anticipation for value creation for these companies. Two, I think it's a reflection of a lot of specialized funds in the sector got a windfall from some of the M&A activity from the end of last year. A lot of the hedge funds in the sector, somewhat concentrated, where their top holding can be 20-30% of their assets under management. So if they're fortunate enough to have one of those stocks taken out, that can return hundreds of millions of dollars in capital to a single fund, which is going to redeploy that. And a lot of these guys like to redeploy in these structured transactions. And I think the third point would be the fact that you're seeing deals done at a premium speaks to a competitive nature of getting capital into these companies. And I would consider that to be a leading indicator for expectations for the rest of the year.
Yes. So it sounds like we're optimistic, but the timing, the actual catalyst that we're looking for, it's still a little nebulous out there. So we're poking around for deals. Probably time to start building positions. Probably not the best time to back up the truck per se in the vernacular of a Midwesterner here.
Yeah, it's always hard to predict timing exactly, but let's come back to where we started, right? Record relative underperformance of biotech versus major indices. We've been 13 quarters in a kind of a pullback and consolidation phase. We're kind of at the top end of that range. I think there are expectations at some point this year, if we see lower cost of capital, that'd be a nice tailwind. Um, Biotech, Jonathan, has been one of the most highly correlated subsectors to the 10-year yield.
Hmm.
And so, as the 10-year is gone, biotech is gone. And, with, I think, expectations for a declining 10-year, that should be a tailwind for the sector. And look, we're seeing a steady stream of M&A. We've seen some interesting clinical and regulatory readouts that have been positive. This financing activity we're talking about, I think, is a leading indicator anticipating value creation for the next crop of clinical and regulatory readouts and potentially more M&A. So I think all the pieces are in place, and I think the table is set. And look, just thinking about a market observer, looking at some other corners of the market that are making record highs, and some of that's justified, some of that might be considered, some valuations maybe getting a little stretched here and there, et cetera. I think it's a great time to look in maybe the unappreciated or underappreciated areas, before they become the next hot trend to chase.
Awesome. Hey, this was one of your best ones. Thanks, Mark. Appreciate you taking the time, and thanks everybody for joining us today. We'll wrap there. Reach out if you need anything, and have a beautiful day. Appreciate your time as always, Dr. Charest.
Always a pleasure. Thank you.
Take care. See ya.